Good morning. Today is Monday, December the 11th. The time right now is 9:38 in the morning. Today we're going to do a recap on all that has happened over the weekend itself. We can see that equity prices in the States continue to rally. In fact, the Dow Jones Industrial Average in the Micro E-mini futures has rallied to the year's high at just under 36,700 points. And this is not that far away from the all-time high, which was last registered in January of last year. We can see the prices are probably about 200 points away from the all-time, even lower than that. I think the all-time highs traded was 36,832. So we are basically less than 150 points away from the all-time high, and there's a very good chance, based on momentum, we should be able to see a new high traded in the Dow Jones very, very shortly. And the question here will be how it closes once that happens. If this market actually created a new high this week, which is very highly likely because we have major high impact news coming out from the States this week itself, and starting with tomorrow's CPI numbers. And if that number caused prices to actually escalate, we want to see how it closes by the end of this week. If it closes lower than the opening of tonight's trading, that means we have a key reversal that could actually impact prices negatively. So keep an eye out for what's happening in the Dow Jones. In the S&P 500, similarly, we have prices trading at a year high of 4,666 in the futures contract. And this, again, is not that far away from the all-time high, which is at 4,808. We can see that is also about 100 over points away from where the record high was traded on January the 4th, 2022. So again, but unlike the Dow Jones, we have nearby resistance right ahead at 4,708 to 4,734, 39.5. Beyond that, there's another layer at 4,765 and 3/4 to 4,739.5. This is basis the Micro E-mini futures S&P 500, which is a very liquid contract traded in the CME. And of course, the other one that is that's also been doing very, very well this year has been the Nasdaq 100. We can see prices is nowhere near the year high just yet. The year high was traded about 2 weeks ago at 16,207 and 3/4. The high traded on Friday was 16,119, and compared to where the market all-time high is actually quite a bit of a distance away, something like 600 points away, and that is traded in November of 2021. Okay, we knew that the Nasdaq actually peaks out 2 months before the S&P 500 and the Dow Jones peak in 2022. So this will be playing a bit of a catch up, but the Nasdaq has been doing very, very well this year. In fact, last Friday's rally was largely led by tech stock. Again, there was no surprise there. Over in Asia, we can see that the Nikkei 225 has bounced this morning from a low of 32,090, and this actually completed a 200% decline from where the initial drop was from a high of 33,870. So this drop here is a little bit sharp. So prices right now has traded into this bracket of prices at 32,800 to 33,010, and it's vulnerable that it's possible that the market may have hit a temporary high for now. Over time, I do expect the 32,090 to be revisited again, possibly going into the 31,800 levels. Over in Hong Kong, we saw further losses in the Hang Seng. There was actually a bit of a tentative rally. I would say rally is basically stabilizing on Friday, but this morning we saw price continue to escalate lower to a new low for the year at 16,000, below 16,000, and it's currently trading at 16,400 levels. So no, sorry, it is not 16,400. It is 16,100 odd levels. We can see that the prices remains very vulnerable, but the good thing is that we has hit a pocket of prices which may actually cause prices to hold out. That level is 15,945 to 16,125. So the low here is 15,980 actually falls into this bracket of prices, which may actually cause buyer to return. So near term, I think that the level to beat will be the high here at 16,649 in the 4 hours time frame. So let's look out for a challenge of this level here. Maybe I should mark it up for you. And this level is 16,400. 649. So look out for a challenge of this level. If the market can actually break above this, that will be a break of structure, and that actually increase the odds of a more substantial rebound. Okay, and we have to keep an eye on this one. In the dollar index, you can see that the dollar continues to hold out very well after hitting a low of 102.38. The prices traded to a high of 104.27 on Friday, and it hit a pocket of prices between 104.22 to 104.44. Basis the futures contract traded on the ICE, which is the Intercontinental Exchange. So that being said, we have a three-wave bounce, and that put the dollar index vulnerable to the downside. If the market actually closed below 103.21, that will confirm this view that the market is resuming its downtrend. Over in the euro dollar, if the dollar is about to come down, that means to say that all principal currency have a chance to actually bounce. The low traded in the euro dollar on Friday was 107.24, and this opened up the prospect of a bounce back to 108.55 to 108.75 levels. In the sterling, the market looks structurally strong because the pullback has been quite limited to 125.02, and if this market stabilizes and the dollar actually comes back down, we can see the prospect of a run up in sterling prices, perhaps even beyond the 127.33 high, is actually pretty good. So watch out for sterling. Over in Aussie, the Aussie remains the oddball. The market did not retrace in a classical three-wave, at least not yet. We can see that the price rallied back to 0.6620 from a low of 0.6525, and this actually create a situation in which while the principal currency may actually rally, the Aussie may actually come back down below the 0.6525 low. If that's the case, then the market opens up to a possibility of further losses to 0.64 half levels, which is this area over here. Over in the dollar Canadian, dollar CAD has been doing very, very well. In fact, there is prospect for further rally in the dollar versus Canadian. The low traded so far is 134.80, and the market has traded to a high of 136.19 before pulling back on Friday to 135.50 levels. Now, this opened up a prospect of further rally, perhaps into the 137 levels. So if this is the case, look out for further rise in the dollar versus Canadian. Now, dollar yen is a different story. Dollar yen has actually kept below the 145.30 level, but this morning we saw a breakout of these levels, and which opens out the possibility of a challenge of the next layer of resistance, which is likely to be at a 146.70 levels, okay, to the 147.50 levels. So further gains is definitely possible. So look out for further gains in the dollar versus the yen, okay. And over in precious metal, we can see gold prices continue to be retreating from the all-time high, which we saw just exactly 1 week ago, from a high of $2,148 per ounce all the way to a low of $1,994.74 last Friday. We can see that this market remains vulnerable. It's currently very, very close to the October close, which is a $1,990.80. So if the price closed below here, that means the market is actually vulnerable for a next test of a key level, which is $1,960. If the market cannot hold here and close this the year 2023 below $1,960, we are primed for further losses into January of next year. Over in silver, we see the same structure. We can see the price has actually stabilized somewhat at $22. Let me see what's the new low traded this morning, $22.90. And this is also very, very close to the October close of $22. And let me see what was the price, $22.90. So again, sorry, this is not the price. The low is $22.82. So this is also very vulnerable. Market may actually continue to slide further to test the $21.86 going forward. Top side resistance is about $23.80 to $24 and about $24. So between these two layers of prices, the markets is likely to trade to the downside to test the bottom. Over in Bitcoin, we can see Bitcoin has actually stabilized with a high of $44,715 on Saturday itself, and currently the market is coming back a little bit down based on some profit taking, but so far the profit taking has been quite limited. This is where the origin of the latest move up to 44,715, and the area is about 41,200 to 42,100. 42,200, sorry. And there's a possibility if we see a more sustained profit taking, this could be the area to gun for. Overall, the momentum suggests that we can see further gains in Bitcoin prices, largely on expectation of a early approval of the spot BTC ETF license as early as January. So this is the ongoing development, and market analyst has been very hopeful the SEC, which is the Security Exchange Commission, may actually approve some of these applicants. The other one obviously is the halving event, which will come around somewhere in April of 2024. So usually, based on past experiences, months before the halving event, it actually caused prices to rally. So this time will be no exception. So keep an eye out for further gains in Bitcoin, in fact, across the board, all digital assets. This is all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow with further updates. Bye-bye.